Now we will be revising foreign trade policy. See, by the time you have done GST and customs, now it becomes really tiring to just keep up with the number of chapters, and at the end you always feel that no, let me not do foreign trade policy. Please don't do that. At least this revision part, see some important areas so that you are able to recall and write. If the question paper has a very easy question on FTP, you should not miss out on that easy question. And that's the reason this we will do it quickly from the PDF. The PDF is also available in the note section description. This will help you to quickly recollect and recall important provisions of foreign trade policy. So let's start. Now, central government has the power to make foreign trade policy, and they have made foreign trade policy 2023. This foreign trade policy basically provides instruction and guidelines for import and export transaction. Obviously, it comes from Foreign Trade Development and Regulation Act 1992. The purpose behind foreign trade policy was to develop exports and regulate import and export transactions in India. It provides for various promotional schemes which are inbuilt in this foreign trade policy. Now, as an exporter, you wish to claim a number of benefits. Those benefits are available in foreign trade policy. The first benefit which we will be dealing with is advance authorization. Now, advance authorization, what is the benefit? It's a very important segment. Inputs can be imported without payment of custom duty, and those inputs which are physically incorporated in the export product, those can be imported. Fuel also can be imported in this. Mandatory spares is restricted to 10% of the CIF value of the authorization license. That means if your authorization license is of 1 crore, then 1 crore into 10%, up to 10 lakh worth mandatory spares can be imported, because mandatory spares is nothing but finished goods, and thereafter you have this balance which can be used for inputs which will be physically incorporated on those export goods. Validity, obviously the validity is 12 months from the date of issue for you to import. One revalidation is allowed for another 12 months time period. If it is deemed export, then you get higher time limit, project execution, or 12 months, whichever is later. Who is eligible for advance authorization? A manufacturer exporter or a merchant exporter tied up with a manufacturer exporter is eligible. For pharmaceutical products, basically the license will be given only to the manufacturer, not to the merchant exporter. An authorized economic operator holder with a 2-star and above status is eligible for advance authorization. See, one can be, if you have an authorized economic operator license, obviously you are eligible. Plus, if you have applied for it, then also you will be eligible, because the law clearly says that one is authorized economic operator who holds this license. Second, a status holder who has applied for authorized economic operator license and he has a 2-star status rating. Status holder, government gives status 1 star, 2 star, 3 star, 4 star and 5 star. We'll talk about it in some time. Then DGFT has the power to deny any authorization, which is the sole discretion of DGFT, and authorization can never be claimed as a right of any person. Who is an authorized economic operator? Basically, CBIC started a program that those who are in import and export on a regular basis, let them get this accreditation program so that they are able to import and export quickly and without much restriction. That was the basic intention of giving authorized economic operator. Don't forget that it is issued for physical export and deemed export or even intermediate supply, plus stores which is being supplied to a foreign going vessel or aircraft. There are two cases, two specified deemed export cases. One, supply of capital goods against EPCG and supply of goods to UN or international organization. Here these are not exempted from anti-dumping duty, countervailing duty, safeguard duty and specific safeguard duty. IGST, basic custom duty, social welfare surcharge, everyone will get the benefit. Plus others will get the benefit of these additional duties also. However, two cases. One is supply of capital goods and supply of goods to UN or international organizations, which is not eligible for the benefit of anti-dumping duty CVD. These they will have to pay and only then they can import. Then all this is subject to SION, standard input output norm, which is defined. Export obligation period, you get 90 days time from the date of clearance of the import consignment. The moment you clear the import consignment, from there 90 days is given to export the finished goods, because ultimately whenever government is giving you a benefit, what does it want in return? It wants you to meet the export obligation. That is how any license under foreign trade policy works. What can you import? Inputs which are physically incorporated, fuel, oil, energy, mandatory spares which is restricted to 10% of CIF value. Now talking about the basis. How is it issued? Obviously it is issued based on SION, standard input output norm, but it is also available on self-declaration basis, plus you can get a prior fixation done from the norms committee, which is the head for determining any norm if your product is not mentioned in that. Plus there can be a self-ratification scheme where you get it done from a certified engineer. Plus say suppose there is an additional input. Additional input does not mean quantity wise. Additional input meaning a new type of input which is required for making this product and which is not there in SION. Then you will have to get that additionally ratified. Obviously chartered engineer certificate will be sufficient for this. Features. Pre-import condition is mandatory. That means all the inputs which you import has to be physically incorporated. Plus you import it, then you use that raw material to make the finished goods. It should not be a case that you have made a finished goods and then you import those inputs. That's not allowed. Pre-import condition is applicable. Same inputs which you have imported, that input only should be used to make the finished goods, not some other input. Actual user condition, obviously these licenses are not transferable, plus raw material imported in this is also not transferable. However, once you meet the export obligation, finished goods can be sold in domestic area also once export obligation is met. Then minimum value addition 15%, but in some cases government can specify even less than 15%, plus in some cases they can also specify more than 15%. If any goods is supplied free of cost by a foreign buyer, then the value of that free of cost material will be added in import computation as well as export computation. That's given in the law. If you want to purchase these goods from domestic area, then you will have to get an invalidation letter or advance release order, as the case may be. Annual advance authorization is also given, but there is a limit. It is restricted to 300% of FOB value of exports or FOR value for deemed export. Free on board for export, deemed export free on road in the preceding financial year, or 1 crore, whichever is higher. This is the limit for annual advance authorization. Then there are some common points which are applicable for advance authorization as well as DFIA, duty free import authorization. See, in advance authorization you first take the authorization, import the inputs and then send the finished goods outside India. But in DFIA, duty free import authorization, first you can get those goods. That is, you don't have to get those physical inputs. You can first do the export and then you will get a duty script. Based on the DFIA license, you can import the raw material, or these scripts are also freely transferable. That means, say suppose you have exported shirt Now, what is the raw material used for shirt? Cloth. So, once you export the shirt under duty-free import authorization license, government will give you a DFIA license for import of cloth. Either you can import the cloth or you can sell these licenses. But DFIA has a value addition of 20%, while advance authorization has a value addition of 15%. DFIA only basic custom duty relief is available, but advance authorization you get relief for all types of custom duties. None of the custom duties is payable. Advance authorization you have to get it before. Pre-import condition is also applicable, but in DFIA first you can export it and then you will be getting that script. Advance authorization is not freely transferable, but DFIA is freely transferable. Then advance authorization is given only where Sion is mentioned, or there are certain other ratification schemes which are done, but DFIA only given if your product is mentioned in Sion. Plus, it should not be subject to actual user condition. If it is subject to actual user condition, then you will have to go for advance authorization, because DFIA is freely transferable and actual user condition is not applicable for DFIA. This comparison can also be asked in your exams, so be careful between DFIA and advance authorization. Now let's talk about some common points. See, accounting of inputs is mandatory. Whatever inputs have been used for making those products have to be specifically recorded. Prohibited items cannot be imported or exported. Some products can be imported or exported only by state trading enterprise, but if you get an authorization from them, then you can also import or export that. Restricted items obviously allowed only with a license. Domestic sourcing of inputs allowed with invalidation letter or advance release order. Currency should be foreign currency, plus when you realize it, it has to be foreign currency and Indian currency as permitted by RBI. When we talk about DFIA, the benefit of advance authorization scheme is also available for DFIA. That means you can import without payment of custom duty, but here it is only for basic custom duty. Plus, there is a restriction on import of tires which is not allowed. Eligibility, obviously it is post-export basis. First, you have to complete the export within 12 months of date of filing the application that I am going to do the export under DFIA license. Then next 12 months, once the export is completed, you will get DFIA, and once you get DFIA, it has to be used within 12 months because that is the validity of a DFIA license. No DFIA will be given when there is a condition of actual user on a particular input. Transferability allowed, minimum value addition would be 20%. The next topic is RODTEP. Now, when you talk about remission of duties and taxes on export product, basically when you are an exporter, there might be some goods or services on which you would have paid central excise, VAT, CST. Like for petrol, diesel, there would be a inbuilt CST or central excise, or you have taken transportation service and the transporter would have used petrol. So there might be some taxes on the purchase which have not been refunded to you. Otherwise, GST which you pay on purchase is refunded to a exporter. But what about other unrefunded taxes? To compensate that, government has said that I will give you a remission of duties and taxes on export product based on a percentage, or it could be a value per unit. Now this percentage will be based on FOB value, and this will be in the form of e-scripts. These e-scripts are freely transferable, but these e-scripts can be used for payment of basic custom duty. Most important thing in this is ineligible categories. In some cases, I mean in fact lot of cases, you will not get RODTEP. The first one is if substantially same form export goods imported are being exported. That means no value addition done, you wouldn't have incurred much on the purchase side, let me not give you a refund. Then transshipment cases, minimum export price or export duty. It makes sense. The moment you government has levied a minimum export price, that means government wants to stop exports or curtail exports or reduce exports, or they have levied export duty on a product. Will they give benefits for such products? The answer is no. Restricted or prohibited products, deemed export, you will never get RODTEP. Goods manufactured by EOU, EHTP, SEZ, free trade zone, because they already claim a lot of benefits. Products manufactured for discharging export obligation under advance authorization, DFI or EPCG license. Products which are manufactured or exported availing the benefit of notification number 32/1997, which is dealing with job work and then re-export of goods. So when you import the goods for job work, that time you will not pay custom duty because of this notification where you have just imported for job work and you are going to re-export it. So if you are already claiming that benefit, then RODTEP is not given to you. Then somewhere some custom ports or airports where electronic data interchange is not allowed, EDI facility is not there, again RODTEP will not be available on those ports. And goods taken into use after manufacture, basically we are talking about used goods. Obviously for used goods government is not giving you RODTEP, because machines, if you export them, you will not get RODTEP. Then comes status holder. Status holder, current plus previous 3 financial years. Remember this very clearly. The export performance of current plus 3 financial year, preceding financial year, will be considered to determine the star rating. 1 star is available with $3 million, 2 star $15 million, 3 50, 4 200 and 5 $800 million. Should we remember this, sir? Yes, it is a very important discussion. It can be asked directly in your exams. 3, 15, 50, 200, 800. Easy trick to remember is 3 into 5, 15. 15 approximately, if you multiply with 3, so they go by 5, 3 and then 4, 4. So 15 into 3, 45, they kept it as 50 million. 50 million, then you multiply with 4 2 times, which is 200 and $800 million. You can also use some other technique, but you need to remember this because a question can be asked directly. Now, some additional points relating to status holder. Export performance will be counted not just on FOB but also on FOR. That means both are included, deemed export as well as physical exports. For deemed export, rate of exchange of the 1st April of each financial year will be used. Now for granting export, it is necessary that in all 3 preceding financial year you had export performance. That means you have been exporting for last 3 preceding financial years. For calculation of export performance of 1 star, double weightage is given. Double weightage is given for MSME sector, but only for 1 star. That means if they have done $1.5 million of export, it will be considered as $3 million and they will be eligible for 1 star status holder. Manufacturing units under ISO or BIS, units located in Jammu and Kashmir, Ladakh, Sikkim, and export of fruits and vegetables. Then the law deals with privileges. What is the benefit which you get if you are a status holder? You can get authorization of self-declaration basis. SION will be done on priority basis within 60 days. Exemption from compulsory negotiation of documents through banks. No need to furnish bank guarantee. 2 star and above can set up a export warehouse. Plus, if you are 3 star, 4 star or 5 star, then self-certify your goods. That means you don't see, in some products you require certification to be done by the authorities. If you are a 3, 4, 5 star holder, then self-certification is allowed. Plus, you are entitled to export freely exportable item for promotion. That is, samples can be sent outside India, subject to specified annual limits. As of now, government has not, ICAI has not kept the annual limits for you. Preferential treatment is given, plus they are responsible to skilling and mentorship of other small exporters. Then the next discussion is with regard to EPCG. Again, an important topic, specific questions can be asked. EPCG, what is the benefit? You can import capital goods without payment of custom duty. It could be pre-production, production related, or post-production related. Now, as government is allowing you such a big benefit, they want a export obligation. Two types of export obligation. Average export obligation, which is the average of preceding 3 licensing years, and specific export obligation, which is over and above the average export obligation, 6 times the duty saved in 6 years. That has to be met. Say suppose your average exports for last 3 preceding financial years was 100 crores. That means once you have imported a capital goods, your export should go up drastically. So say suppose in the 4th year, that means once you take the EPCG license, the export was 110 crores. Have you met the average? Yes, 100 crore will go into average and 10 crore will be considered as specific export obligation. Like this, the specific export obligation to be met is 6 times the duty saved in 6 years. Say suppose you have saved 30 crore in custom duty saved. Then 30 crore into 6, 180 crore of specific export obligation should be done in 6 years. 1, 2, 3, 4, 5, 6. If you have met 75% of the export obligation in 3 years or less, then the balance will be waived off. Plus, if you purchase this machine domestically, then in that case, you don't have to meet 6 times the duty saved. You have to meet 6 times into 85%. So 15% discount is allowed if you purchase that capital goods from Indian market under EPCG, obviously using advance release order or invalidation letter. Now, in this duty saved, that is this 30 crore. Say suppose 30 crore was the duty saved. 6 times will be 180 crores. Say suppose I have paid IGST. If I have paid IGST, it should not be considered as duty saved. Now, if you have paid IGST and not taken ITC, then it is not considered as duty saved. If you have availed ITC, then you have taken the benefit, then it is considered as duty saved. So careful about this point. IGST paid and ITC taken, that is duty saved because you have availed the ITC. If you don't take the ITC and pay it, then that will not come in the calculations. What is the validity? 24 months from the date of issue. Revalidation is not permitted, no extension will be given. Then import of capital goods is subject to actual user condition, but once you complete the export obligation, thereafter you can sell these capital goods. Eligible exporter, same thing, manufacturer, exporter, merchant, exporter, common service providers are also allowed. You can import capital goods in CKD form or SKD, semi knockdown and completely knockdown form. Computer system and softwares which are part of capital goods, not all computer systems and softwares, careful. Spares, molds, dies, jigs, fixture and refractories or catalyst, which is to enhance the speed of the process. Incentive for fast track companies, important for case study based question. Okay, now coming to EOU. EOU, EHTP, STP, Software Technology Park, Export Oriented Unit, Electronic Hardware Technology Park, or biotechnology park. See, these are also allowed to import capital goods and inputs without payment of custom duty. In fact, all these are regarded as deemed warehouses. So whatever is the normal benefit available, even they get the benefit. Import of inputs and capital goods is allowed without payment of custom duty. Plus they can store it in their warehouse, that is EOU premise will be considered as warehouse. It can be stored forever in that warehouse without any interest. But obviously if you remove it to domestic tariff area, then taxes will be applicable. Trading units are not allowed. This is an important point. Minimum investment of 1 crore, but obviously for EHTP, STP and BTP or EOUs in handicraft or agriculture sector, 1 crore is not applicable. There should be net foreign exchange earners. In a block of 5 years, their NFE, net foreign exchange, should be positive. That means you have earned more for the country than you have spent on various imports. Okay, then you get an exemption from industrial licensing. Export proceeds can be realized within 9 months. 100% money can be stored in EEFC account, exchange earner foreign currency account. Bank guarantees would not be required because you will have to give a bond once you take a EOU license. 100% FDI is also allowed. Objectives basically to promote exports and all kinds of import exports are allowed. Then the goods which are imported by these units are subject to actual user condition. Careful about this point. They get a reimbursement of central sales tax. They also get a refund of GST which they have paid on purchases. Inter-unit transfer obviously are allowed on payment of applicable taxes. Exit from EOU. Once you exit, you will have to pay back all the benefits which the person has taken, obviously on the stock. Conversion, yes, allowed. DTA units may apply to become a EOU unit. This is one of the last provisions of EOU. Coming to deemed export, again an important topic for 5-mark theory. They can directly ask you to write about all the cases of deemed export. See, basically deemed export is where the goods are manufactured in India and the goods are basically supplied to some projects which are of national importance or some persons who are then required to export those goods or services. Goods, 3 categories. 1. Supply to domestic units who can import without payment of custom duty or at reduced rate. Supply of projects which involve international competitive bidding and infrastructure products of national importance. There could be deemed export benefit for manufacturer. It could also be main contractor or subcontractor. Like advance authorization, the benefit will be available to the manufacturer. EOU, STP, EHTP, BTP, manufacturer. So if you are supplying to a EOU, you'll get the benefit, not your subcontractor. If you are supplying to advance authorization holder, you will get the benefit, not your subcontractor. EPCG, same thing. But in some cases, main contractor also gets, subcontractor also gets. Like any project which is financed by multilateral or bilateral agencies under international competitive bidding, or any project where import is permitted as zero custom duty, again international competitive bidding projects, supply to UN or international organizations, mega power projects and nuclear projects. Benefit basically, see, if you are a deemed exporter, you can also take advance authorization for your supplies, because if you take advance authorization, you have to meet export obligation. Export obligation can be met either by physical export or by deemed export. Plus you get deemed export drawback. Whatever you have paid as taxes on the purchase side, that would be given back to you. Terminal excise duty, basically excise duty paid on purchases, that will also be refunded. Conditions for deemed export benefits: directly, some cases you have to export directly to that person. Some cases even main contractor, subcontractor is permitted. Then there are various trade facilitation measures. trade facilitation agreement has been entered by Government of India, and as India has ratified it, India is also obligated to make the trade quick and fast in India, any import export transaction. So they have formed a national committee for trade facilitation, which helps in reducing the cargo time, release it quickly, getting a paperless environment, transparent and predictable legal regime, and improving the investment climate. Then towns of export excellence, important for 2 marks. Basically, if certain towns are continuously contributing to the exports, then those will be regarded as towns of export excellence, and government will try to give more and more benefit to these towns of export excellence. Then this is also an important point, developing districts as export hubs. See, what is the basic objective of developing districts as export hub? In a particular district, there might be some product which has acceptance throughout the world. Then they are trying to promote those particular districts, and if each district is able to export more, automatically the exports of the country will go up drastically and the income levels will also grow up. That's the basic objective of developing districts as export hubs, where they will promote, the district collectors will promote, saying that you export these products and we will try to give you more and more benefits. For this, government has made district export promotion committees at the district level. Handling quality complaints and trade disputes is important. Then we talk about some general provision. See, when we talk about import-export code, required for any import and export transaction unless exempted, given by DGFT. At present, PAN is equal to the IEC. Mandatory documents for exports are bill of lading, and then you have commercial invoice and shipping bill. For imports also you require same documentation, plus government also may ask for some additional documentation depending on case to case. Again, this is important for your exams. Penal action which can be taken against a person, and he can be put under denied entity list. Now, what is this? Say suppose a person fails to meet export obligation. He has taken the license but not met the export obligation, or violates a condition and does not pay the taxes, because if you have failed to meet export obligation, you should pay the taxes. If that is not done, penal actions will be initiated, plus he will be put under denied entity list. Once he is placed under denied entity list, DGFT has the power to directly refuse any further license which this person applies, and he will not get any renewal of the current license as well. The moment he pays the duties correctly, again this denied entity list will be revoked and he will be eligible. Then let's talk about some provisions which is related to import of goods. Actual user condition, mandatory until and unless it is specifically dispensed with. Samples can be imported, yes, duty free up to 3 lakh rupees, and exporters are also allowed to import samples up to this 3 lakh, because they will be required to manufacture those products and send it outside India. Gift, when you talk about gift through post or courier, it is prohibited, but Rakhi and life-saving medicines can be imported as gift even through post or courier. Passenger baggage, obviously it is dependent on baggage rules 2016. Re-import of repaired goods. Say suppose goods have been repaired outside India and you re-import. It can be done without an authorization. Any goods which is used for a project abroad can be re-imported, at least if it has been used outside India for 1 year. Then without authorization you can import it. Otherwise you will have to take a license and import it. That's the only thing. Prototypes, yes, that is also permitted for actual uses. Without any authorization, import is allowed. Again an important discussion. Second hand goods. When we talk about second hand goods, which is other capital goods, it is restricted until and unless it is for repair, refurbishing or re-engineering. We don't want waste to come into India. Second hand other than capital goods we don't want. Capital goods we are fine if they are refurbished, reconditioned, for which chartered engineer certifies that 80% of the residual life is still there. Any other case will fall under restricted category. That means it can be imported only by authorization, like AC, DG set, diesel generating sets, desktop computer, refurbished products, all notified electronic and IT goods. All these, basically when we talk about electronic waste, government wants to deny it and it is restricted. But what about machines, etc.? Yeah, machines, etc. is allowed to be imported without any authorization. But electronic waste, there is a restriction. Electronic waste like air conditioner, DG set, desktop computer, refurbished spares and notified electronic goods, these are not allowed without authorization. They are restricted, so they can be imported only with authorization. Then some miscellaneous provision. Obviously goods can be sold on the high sea, that is permitted. From merchant exports are also allowed, that is from non-taxable territory to non-taxable territory. And then we talk about some export provisions. Will the supporting manufacturer also get the benefits of export if his name is mentioned in the bill? That is also third party export permitted. That means both the names will be mentioned, merchant exporter's name, also the manufacturer exporter's name. Samples, export of samples allowed if it is freely importable, then no issues, they are allowed without any limits. The limit is 5 lakh rupees. Passenger baggage, obviously when we talk about passenger baggage, it can be either by the passenger or if unaccompanied within 1 year before or after the departure from India. Import for export basis, yes, that is also permitted without any authorization if those goods are freely importable and freely exportable without any authorization. But say suppose it can be imported under bond and then cleared against convertible foreign exchange, then in that case, and also which are restricted for import, then in that case import for export will be allowed only with the authorization. Capital goods which are freely importable and freely exportable can be imported by executing a LUT or bond. See, in these cases only one particular provision has a complete relief, and that one particular thing is if any goods other than these capital goods are freely importable and freely exportable, then without authorization it is allowed. Other cases you will have to give a bond or LUT. Plus, when we talk about payment and receipt of on import and export products, all the export contracts should be denominated in foreign currency or it can also be denominated into INR. But when you receive the foreign exchange, you should get foreign exchange. Plus, INR is permitted wherever RBI allows it. If you don't realize the export proceeds, then the benefits which are taken have to be returned back to government. Export credit agencies are for supporting the exporters. Obviously they give a financial credit. Export promotion councils, their main job is to promote exports. See, most of the exporters are registered with Export Promotion Council so that they can avail various benefits which are extended by government. One of the major benefits which we earlier also said is self-certification of origin of the goods. You can certify that goods belong to India, that is, you can write made in India without even going to the authorities. This is one of the major benefits which is allowed to exporters who are registered with Export Promotion Council, and they of approved exporters based on status holder, that is 3-star, 4-star and 5-star. So this was a quick revision of foreign trade policy. At least this much don't miss, so that if a easy question comes, you are able to tackle that easy question easily for your exams. Your mode of practice for each chapter of GST has to be practical as well as case study type. Customs, there will be 1 or 2 practical questions and 2 to 3 theory questions, and then FTP you will have theory questions. Sir, in GST even the theory ones are mostly case study based questions. Last thing, when it comes to GST, don't miss out on case based MCQs. At least see various case study based MCQs for about 1.5 hour or 2 hour max. Have a look at those case studies, see the points which are easier, don't miss out on the easier points. Output and ITC computation may take time, GST payable computation may take time, but all case study based MCQs will have 2 to 3 easy questions as well. Have a look at all these easy questions. We should not miss out on those easy questions. Computation related questions take up at the end so that you are able to utilize your time properly. Pick up the easy questions from your paper. First complete those easy questions. Keep a specified time limit in that 3 hours for your MCQs. If I were to do a computation, 3 hours is about 180 minutes. 180 minutes into 30% of your questions being MCQ, about 54 minutes for MCQ based questions. That's what you should allocate. It might take more time sometimes, but that's why plan your paper first from the subjective areas. That's my suggestion. Or you might also follow a technique of reading first 15 minutes and reading all the MCQ based questions and then going for the case study. But when it comes to case study based questions, smaller ones can be done quickly. Either you know the answer or you don't know the answer. But computation related questions which involves output minus ITC will consume too much time for 2 marks. So first clear off subjective type questions. Once you clear subjective type questions, depending on what you know and what you don't know, once you clear those subjective type questions, you are now into the flow of indirect taxes. Once you are into the flow of indirect taxes of solving, then you go to the MCQ. Your case study based MCQ will also run faster. But taking up case study based MCQ at the beginning is not suggested by me, though every student has a different technique, and follow the technique which is comfortable to you. Wishing you all the best for your November 23 exams. Just to add, let's now quickly go through the amendments of FTP. RODPTEP, Remission of Duties and Taxes on Export Product. EOU is now eligible, SEZ is now eligible, BTP, EHTP, they manufacturing goods and exporting is eligible for remission of duties and taxes on export product, they will get duty credit scripts. Second, any goods manufactured to meet obligations under advance authorization, DFIA, EPCG are also eligible for RODTEP. Second, which we have already discussed in the amendment video which is there on YouTube channel, used IT assets from SEZ to DTA have been brought under restricted category. Be very careful on these. And then the changes relating to merchant trading, which is allowed within one specific country, is now permitted. See, merchant trading is where I am sitting in India, I am getting a trade from US to Sri Lanka done without the goods entering into India. Now it is also permitted that I can do it within US. Supplier is in US, recipient is in US, I am sitting in India and getting that negotiation done. Even that is now permitted, that is being allowed. Then there have been some mandatory quality control orders which are required for any product which is being brought to India. But if it is being imported under advance authorization, EOU or SEZs, then they don't have to comply with this mandatory quality control orders. Obviously, it is subject to some conditions that the same product should be exported, it should not be brought to domestic. Plus, when we talk about export, it should be only physical export, it should not be any domestic export. Plus, the approvals which are required from designated authorities needs to be taken. So be careful of this. There can be a question on these quality control orders for 4 marks in FTP. Go through it very carefully. The points are common for advance authorization, EOU and SEZ. If you know one, you will be able to write for any, that is advance authorization, EOU as well as SEZ. Wish you all the best again.